Tech under pressure this week with the Nasdaq down more than 1%. One name bucking the trend has been Apple. It's higher for the week and up 7% this month. Let's bring in Loop Ventures managing partner Gene Munster to talk about Apple going into the holidays. Gene, good news, I suppose, that it seems demand's very strong for Apple products across the board, as it typically is. But you're suggesting maybe greater backlogs or slow deliveries or maybe not enough supply. Where should we be concerned here?
Mike, correct. Proper point to start and anchor in the good news about demand. But the demand topic orbits the supply question. And it, of course, is an art versus a science to try to get to the bottom of what's going on there. One method over the past decade has been to look at their lead times. And we did that today. As a reminder, the lead times are when you go onto one of Apple's country websites and order a product, it's the number of days until it's delivered. And as a point of context is that typically lead times on a Black Friday, we've been doing this for 10 years, typically going into Black Friday lead times for their most recent products, the ones that would have been updated in the fall events, those run about 10 days. And we, of course, had the guidance from the company about this $8 billion headwind, and that translates to about 6 days in the quarter. So my expectation before we did this exercise, again, 6 countries across 10 different products, was that we'd see lead times of 16 days. That would have been essentially in line with what they told us about a month ago. And what we saw was 20 days lead time. So sounds like a small number, but it is measurable and did catch my attention. And I think that ultimately investors should take into account, this is a snapshot. We'll track it for the rest of the quarter. But if it stays at this point, you're probably looking at a $10 billion headwind versus their guidance of $8 billion. Again, doesn't change the anchoring point about the supply or the demand, the favorable demand. But that's the status of supply going into Black Friday.
And how material do you think that is, not just in terms of this quarter's revenue, but to the stock? I mean, it seems as if investors will typically assume that it's demand deferred, it's not destroyed, even if it doesn't get done by holiday. And I guess also the stock seems to just kind of move on, we love the big quality long-term story as opposed to, one quarter's volumes.
Well, it's important that I think expectations are properly adjusted for these data points. First and foremost, I think last quarter is a good example that phenomenal results, but the stock did not perform well after last quarter because there's just so much noise around that. So I think the better job that investors can do at anticipating this. To your the core question is, how much demand is delayed versus ultimately lost. The December quarter does see a little bit more lost demand when there is these push outs, and because of the gift giving aspect of it. I think in a typical quarter, when there is these supply issues, we just pick it up in the previous quarter. But in large and by and large, I'd say 80% of this demand they're going to capture. And so I would agree with you is that it doesn't change the long term about ultimately what Apple's doing, but is going to be an increasing topic throughout the holiday period regarding Apple.